This is Robert Kraft, and I'm your host for the Planet MicroCap Podcast. And joining me today is someone that I've been really looking forward to having come on the podcast. I've heard her interviews with some of our favorite podcasts out there, from Tobias Carlisle and others. And it's Perth Tolle. Let's start there. Perth Tolle. She's the founder of Life and Liberty Indexes. Just to give you guys a quick background on the Freedom 100, or the Life and Liberty Freedom 100 Emerging Markets Index, is a freedom-weighted EM equity strategy that uses personal and economic freedom metrics as primary factors in the investment selection process. Now, I could continue to read off her website, or we could just have Perth give the full wrap right here because she's here. Perth, thank you so much for joining me. I really appreciate it.
Thank you for having me.
It's great to have you on. And first things first, how are you holding up through the pandemic and quarantine? Everyone okay?
Yeah, no, everyone's good here. Everyone's healthy. We're holding up okay.
Well, that's good to hear. So
yeah.
let's dive right in. You know, I'd love to start with your background and really how did you arrive to where you're currently at today?
Yeah, so I grew up in both China and the US as a child. So I was born in Beijing, and then I lived there until I was about 9 years old. And then I came to the US and lived here until I went back to Hong Kong after college and lived there for about a year. And when I was in Hong Kong, I traveled throughout China to, Beijing to Shanghai. And I realized what a difference freedom or living in a free society made in my life, and how different my life would have been had I stayed over there. And I also saw the difference that freedom made in the markets in these different places, in Hong Kong market, in China markets, and in the U.S. markets. So I realized that there was a lot of excitement at that time when I was over there. It was around 2003, 2004, and there was a lot of growth in China. They have been opening up economic freedoms a lot, and the China business was a very exciting thing. But I realized from some of the things that I saw that there was a lack of personal freedoms, of civil and economic freedom, civil and political freedoms, even though they had opened up on the economic freedom side. And it made an impact on me. I didn't know how that would manifest itself until later on. When I came back to the States, I ended up working at Fidelity for about 10 years, if you count the time that I was off with the new baby. And I had a lot of clients that kind of felt the same way that I did. And this was a time when emerging markets investing was pretty hot. And, a lot of clients wanted to be a part of that, but they came from countries like Russia and Saudi Arabia and China as well, that just didn't want to participate in those types of autocratic regimes in their emerging markets investing. But emerging markets funds were very heavy in China, especially, but also in some of these other countries. And right now, as we speak, emerging markets index funds have about 40% allocation to China, or 38 to 40%, depending on if you're looking at something like EM or IEMG or VWO. VWO has 40%. The other two have about 38. And they, in addition to that, also have, for example, 2% to Saudi Arabia, 3% to Qatar. There's also allocations to Russia, to Turkey, to Egypt. So there's a lot of autocracies in emerging markets, just the nature of emerging markets. And, some of these countries are getting a very heavy, concentrated weight. So I wanted to create something that would give investors a way to invest in emerging markets in a diversified manner, without having to have so much in these unfree regimes. So we do freedom weighting. So instead of market capitalization weighting the countries, we freedom weight them. So the higher freedom countries get a higher weight, the lower freedom countries get a lower weight, and the worst offenders as far as personal and economic freedoms are excluded altogether. And so we have no allocation to China, Russia, Saudi Arabia, et cetera. And we have higher allocations to countries like Taiwan, South Korea, Poland, and Chile.
Got it. And we're going to break all that down because I have 1,000 questions. I've gone on the website, I've looked at the fund, and I think a lot of people want to try and understand better, this idea of freedom weighting, because it's so different and unique, but before we get there, one quick follow-up on your background. I mean, what about investing and just the financial markets, just that got you excited to now it's your passion?
You know what? I just liked being able to participate in the growth in various companies or various countries. It's a way to kind of express my preferences or values, or belief in the benefits of freedom, for example. It's a form of expression for me, I guess.
Very cool. Yeah, no, I mean, it's interesting. We just had Maya Peterson on, and she was talking
Oh,
about,
she's awesome.
she's the best. I'm such a fan. And
Yeah. What is she, like 18?
I think she's 17. She just published her second book.
Yeah, no, I just got a copy of it, and I'm speechless. Like, I haven't posted it. I haven't said thank you because I have no words. Like, so.
I can't wait. I can't wait to read it. In fairness, I hadn't read the first one yet, but, and then she just published the second one, and I'm so excited to read them.
My kid read the first one, Early Bird, and she wants to invest now. So.
Oh, that's so cool. Yeah. I'm hoping that I'm hoping it's my daughter's first book, or investing book as well.
Yeah.
But my main point in saying that, and it relates to what you just said, is this idea of a chance to express your own values. It's a chance to have your voice heard, and really have an active interest in some of these companies that you're at the ETF level, but it's really cool to see that, Yeah.
I mean, of course, it's good for growing money as well, and actually, yes,
doesn't hurt. That's for sure. Okay, so now let's segue back. Freedom weighting. Can you explain a little bit further about what this means and how you calculate that?
Yeah, so we use metrics from 3 different think tanks: the Cato Institute, the Fraser Institute, and the Friedrich Naumann Foundation for Freedom out in Germany. So when we first started this project, there weren't really any quantified human freedom metrics. There were economic freedom metrics that were quantified, but not personal and personal freedom metrics, such as civil and political freedom. So I wanted something that combined all 3. And so at first, we came up with our own system, and we kind of put a provisional patent on it. And part of that system was the economic freedom side, which I used the Fraser Economic Freedom of the World Index. And so I had contacts at Fraser regarding that. And then when I went to score countries, when I actually started this company, I went to score countries and, get the metrics. I went to their website, and I saw on there something about their new Human Freedom Index. And I was like, what's this? So I looked at it, and it is a combination of personal freedoms and economic freedoms. And they score 162 countries. I just used the 26 countries in the emerging markets data set. And they, look at 76 different variables for civil, political, and economic freedoms, and combines it all together into one score. So I just contacted my contact there, Fred, and I was like, hey, can I use this instead of what I'm using? And then we compared notes, and they were almost identical. And so I'm using theirs instead of my own at this time, because it gives me that third-party objectivity. I operate completely independently from them, and they operate completely independently from us. So there's no influencing of scores of any type, and I couldn't game the system to include or exclude any country. So that made it much easier for us to do the index. It not only saves me like 4 months of scoring out of the year, but it gives us that objectivity. And so these are the metrics that I use, and then I just use that combined country score, so we have all the 76 variables accounted for in there. And just to give you an example of the variables, so some variables for the rights to life, I categorize them into rights to life, liberty, and property. So life is like terrorism, trafficking, wars, torture, disappearances. Women's rights are in there. There's 5 proxies for women's rights, such as missing women, which, there's 30 million missing women in China because of the one-child policy. Another proxy is women's inheritance rights, and then women's rights to children after a divorce. There's FGM. It's very unpleasant. If you know what that is, you know what it is. If not, let's not talk about it. So it's like, women's rights. And then rights to liberty are your kind of political freedoms, like freedom of speech, freedom of assembly, freedom of the media, freedom of religion, and so forth, due process, right? And then your economic freedoms are the property rights. So taxation, rule of law, freedom to trade internationally, soundness of monetary policy, business regulations, and so forth. So all of these combined together is we use the combination score for each country and turn those into country weights. So countries that have a higher score get a higher weight. Countries that have a lower score get a lower weight. And the methodology algorithm does have some countries ending up with no weight at all.
Got it. So this is going to be quite possibly my dumbest question I think I may have asked on the podcast, but I'm going to ask it anyway because, some people don't know what the main difference between these two things are. So here we go.
Okay.
Dumbest question ever. How do you calculate the difference between, what country now is still an emerging market country and one that is now developed?
I have the dumbest answer ever for that question.
Oh, awesome.
So, so we don't. The IMF, doesn't. Who we depend on for that is the big indexer. So like MSCI, FTSE, those guys really set the standard. And I currently use the same ones at MSCI. We're not committing to that. We're not saying we'll always will, but we currently do. The difference there is MSCI includes South Korea in emerging markets and FTSE doesn't. FTSE, South Korea is a developed market. But, we just did that because South Korea and Taiwan are very free markets. And so, it makes sense to have them in there. And also we have no China. So when you have no China, you want some markets that are kind of correlated to China, like South Korea and Taiwan, as a bigger market. So just to kind of have somewhat more correlation to the benchmarks. So yeah, I don't know how they decide that. And but they set the standard. So we just go with the standard.
It was one of those things when we were talking offline and I started thinking about it a little bit more. I'm like, what?
And it really South Korea and Taiwan are huge. It's arguably that they're not emerging markets anymore, and if you look at IMF data, they're very much developed. So, we don't decide that. The industry decides that. And I think they use certain things like the strength of their institutions, the size of their GDP, all kinds of things like that. But that's part of their methodology. And we're not big enough to set standards yet. So, we just go with what the accepted standards are. And that's a lot of our clients gave us that feedback too. So they're like, we benchmark to such and such. So can you kind of, be somewhat close to that? Yeah.
Got it. All right. So let's talk about the ETF construction itself. Can you tell me a little bit more about that and how countries, and then of course the companies within those countries are then added to the ETF?
Yeah. So the country level, once we have the country weights, right? As far as ETF construction, we'd also need the security weights. So the securities, we just take the 10 largest, most liquid out of each country that's included. And then we weight them, market cap weight them within their country weights. We do exclude state-owned enterprises, and that's just to bring the economic freedom theme all the way through, because we do think that, the less government interference in private markets, the better. So, and a state-owned enterprise is probably going to be less efficiently run because they're answering to two masters, the state and shareholders, and typically the state will win out in that scenario. So, So that's the only thing we do is exclude state-owned enterprises. We don't add any other factors. Like we have no value, momentum, size factors or anything like that. And that's from client feedback as well. Before we launched the product, they said, if we wanted a emerging markets value fund, we could get that ourselves. So, they didn't want any of that. They were like, your real innovation is freedom. And so we just isolated the freedom factor for this first product. Now, that's not to say in the future, we may not add other factors, but right now for the first flagship product, we felt that the freedom factor should be isolated, and to see, because it's the first time it's been done, to see that it has a place in the market, that there is demand for it or not, and then go from there.
And then how often is the fund or the ETF recalibrated?
It's once a year, because the country data comes out once a year.
Got it. Okay. So then this is, I'm sure you get this question all the time, but here we go. We're doing it. Another. I hope it's a good question. We'll go from here. Let's say, during that year or just after it's recalibrated, or it doesn't matter when it happens, let's say you have a country in the fund that's really fluctuating in terms of kind of the news flow coming out of it. I'm going, for instance, to the index right now, and I won't name specific ones, but, like in the Philippines, I guess
Yes.
okay, I just named as specific, but in the Philippines, you have a person running the country that's on the fringe a little bit, like
He's
that's,
crazy. Yes. So,
I
so a
guess
lot of these, yeah.
put it
So a lot
nicely.
of these, yeah, a lot of these markets are, still autocracies, are coming out of autocracies. We get that about the Philippines quite often, actually. So, we don't look at, and we have a small percentage of the Philippines, right? So it's one of those on the cusp countries. We don't look at things that are in the news. I mean, we do, but we don't make changes based on headlines. What we make changes are based on the data. So we are completely dependent on the scores to make our rebalance, to make our changes. Now we do have a rule that says it's a freedom decline momentum rule, but this is also done at the annual rebalance. So it's not like during the year we do this. And that just says that if a country declines too fast on a particular scale that we use, that country is kicked out of the index, even if it's already currently in the index. So Turkey, for example, triggered that rule in beginning of 2018. So they were in the index in 2017, but their score had fallen so far and so fast that they were dropped because of the freedom decline momentum rule. And then as far as, there was something else that you mentioned that I want to address, but now I can't. I'm completely blanking.
I think we were just talking about,
yeah.
Oh, sorry.
So media, right? So there's been a lot of news about Philippines, also recently about Poland. They're kind of on the decline as far as their judicial independence and things like that. But some of these things, remember, we're looking at kind of policies and politics, which is another thing that makes emerging markets, is that they are where politics matter as much as economics, right? So that's, I think, another way that some people define emerging markets. But a lot of these policies can be in place but not show up in the market for quite some time. So for example, with these think tanks, we have a freedom meeting every year, and I have the privilege of being at some of these meetings. And in one of these meetings, I believe it was 2015 or 2016, 2015. So the Poland delegate told me that they have think tanks all around the world. It's part of this network, and they come and join the meetings from everywhere. So the Poland delegate at this particular meeting told me that, hey, we might be electing into power kind of a ultra right-wing government that's a little extremist in some measure, and they're going to probably get a constitutional majority, and if they do, then things might go a little crazy. So you might see some of these things which I do see now, such as judicial independence being kind of declined, but he said that won't show up in the markets for 2 or 3 years after that. And so it happened just as he said. Poland was our top country holding in 2017 and 2018. They were top country holding in 2017, and they dropped to number 4 in 2018. But that's 2-3 years after they elected the PIS government that's in power now. So things went pretty crazy, but it didn't show up in markets for a couple of years. In fact, Poland was the top performing market in the emerging markets in 2017. So, a lot of these politics and policies take time to actually play out in the economy or in markets. And so it does, there's a lag time in the time that there's a shift in, political situations and the time that actually shows up in markets.
So here's another question I have for you. When you're recalibrating and you're rebalancing it, because once a year, right? It's just once a year. So, when has there been a time where you've been like, huh, that's in there? Or then been another time where you're like, wait, why is that country not in there? I'm sure you do some follow-up research just to be like, what? Why? This doesn't make any sense.
So I see that more on the negative end, like, why is this country in here and should it really be in here? So for example, India, we have a small allocation to, and India is very well known for its, terrible women's rights. And I tend to pay a little more attention to women's rights. And so when it first made it into the index, I was a little surprised. And but it does have, and also India is very protectionist, so they have some lower scores on the economic freedom side as far as trade and business regulations and so forth. So but India is, we go by the scores. So this is like, it doesn't matter what my personal opinion is or my subjective impression of the country is. India is, the biggest democracy in the world and the oldest democracy in the world. So, it has a lot of potential, even though they have bad women's rights and they have, protectionist policies and so forth. There is a huge population of very well-educated and very young demographics. And so I think, and it's very entrepreneurial. I think India does have a lot of potential, but that was one country that surprised me because of just all the things that I hear about their kind of women's rights issues.
I mean, I have to ask, I mean, especially hearing about women's rights issues in some of these countries that are, well, specifically like in India. I mean, how do you feel? I mean, it's kind of hard to just completely disassociate yourself even when you see that, right? I mean, how do you manage that?
Yeah, so it is kind of, I try to focus on the positives. So, like, it's hard to do work like this because you're looking at depressing data all the time. And you see things happening in countries like China, like things with Xinjiang, with Hong Kong, you see this stuff all the time. But there's a lot of positives to focus on, and there's a lot of very exciting things happening in some of these countries, and emerging and frontier markets are kind of really like divergent as far as freedom levels go. I mean, you see the way that Taiwan and South Korea have handled the coronavirus crisis completely differently than, say, China has, right? Vietnam even has handled it very well. Besides the coronavirus crisis, there's other things like Estonia is the freest frontier market, and they do some really amazing things as far as like digital citizenship and things like that. So I try to focus on the positives on these, but also I work with a lot of human rights organizations like the Human Rights Foundation, where I get to meet like real freedom fighters that are, getting jailed, getting banned in countries for the work that they do. And they kind of provide a lot of inspiration for me because I see people on the front lines fighting for this. It's hard to sell freedom to Wall Street. Let's be honest, right? Nobody cares, right? So, by being around activists and seeing that people, giving their lives for these causes, it inspires me to kind of do this work. But I want to go back to the question of what other countries surprised you. So another country that surprised me, and sorry, I just thought of this, is kind of off order, but Brazil did not make it into the index since like 2019 or so. So it hasn't been in the index for a couple of years. And one of the reasons is because our data sources account for homicides as a right to life, kind of. So, if you can't walk down the street without getting killed, then, you're not really free. And so I don't know of any other data sources that account for that. So as a result, Brazil got a very low overall score due to being the highest homicide country in the world. And so that surprised me, but seeing what's happened in Brazil in the time since, I'm glad it wasn't in the index. So I think this, using the data and not looking at other factors that are subjective is extremely helpful and extremely important in this type of investing.
I mean, we could do a whole podcast about the Duarte's crazy. Bolsonaro is a whole nother story.
See, I mean, exciting stuff, right? Emerging markets are fun.
Yeah. Well, one idea I had when you were talking earlier, when I asked about, how it's difficult with the disassociation and, when you see, just still atrocities, especially towards women in some of these countries, it's interesting because at the same time, those are still economies there. These are still countries that even the freedom fighters will say, look, we're not ready to just give up the country altogether. We want to change it, and we still need financial support, and this is a way in which it can support. I mean, am I kind of right there?
Yeah. So the thing about investing in unfree markets is that a lot of these, let's use China as an example, right? So yes, we do want to support the people on the ground in China. It's not it's not the people that we don't like, it's the government, right? So the reason why we use these country level metrics is because governments are in the best position to protect human and economic freedoms. So, Nike operating in North Korea and Nike operating in South Korea would be two different companies. And this is a hypothetical example, obviously. So, in one country you have slavery and child labor, and the other one you have wealth creation and, innovation, right? So it's not the company level, it's the country level that we have to look at. But also, so in some of these unfree markets, whether you're a private company or whether you're a state-owned company, right? You do have to answer to the government. So for example, in China, if the Chinese government says to Alibaba, hey, we want all of your citizen data, all the data of all of your users, because, it's a national security issue, or we're using it to keep people safe during the corona, situation. It's very unlikely that Alibaba or Tencent, for example, could say no to that, right, and still survive. So, the problem there is you're investing in a country where the companies themselves, even private companies, still have to answer to the state. So it's not really investing in the people. You're investing in something that does help the government. And if you look at the returns in the Chinese market over the last 10 years, it's basically flat. So if you look at Shanghai Composite Index for the last 10 years, and my friend Jin Choi did a post on this, which I can link, or I can give you to link if you want. China has basically been flat in their index over the last 10 years, but China has had a lot of growth. That's undeniable. Well, why is that? It's because they don't have the rule of law and the investor protections in place to make sure investors get to participate in that growth, right? So some of that, rising economic growth gets siphoned off to state actors, to people that they want it to go to, and not the investors themselves. So from an investor perspective, it's absolutely important to be in a country that has protections and rule of law and, just protections for investors in place.
So another question I have, and look, every fund, ETF, everyone's gotten killed, right? Up until that, right? I mean, I don't even need to list the performance. I'm sure people probably realize that. I mean, but aside from that, because that's not really the main point of my question, it's really has to do with, the ETF construction and now having to deal with this pandemic. I mean, the funds, or I keep saying, I'm sorry, the ETF has only really been out there since 2012. That was even before, that was after the 2008 recession.
Yep.
And now we're dealing with not just recession, well, we'll leave that to the experts to call a recession.
Okay.
But a pandemic, yes. And that's totally
unprecedented situation.
So I mean, you
Sorry
must
to use that word.
No, hey, unprecedented. That's a good word. So you must be looking at this and just like, I mean, you could do all the research you can and have the metrics in place and, have the freedom metrics and whatnot. But I mean, it might look completely different for 2021, especially if you like, how do you recalibrate for the variable of stay-at-home orders? Some places are longer than others, like how does that now work for 2021? Have you guys thought about that?
I mean, I don't know how it's going to work. So a lot of the things that we've thought about up to now have been thrown out the window, as far as not only this, but all investing. And, to your point, I think that's an interesting point, because a lot of the traditional metrics we use are not going to apply here, or are not going to work the same way after this, right? So, and I work with a lot of very smart people, obviously, at, Alpha Architect, for example, and they're all PhDs, and they're all, just these ninja quants, and, any kind of quantitative metric you can throw at them, they can do something with it, right? But they probably know exactly, which ones are better, which ones are worse to use, for whatever purpose. And but now everything is just like, it doesn't even work as well. You look at the most revered investors in our circles, right? For example, like Cliff Asness, just wrote the another value article, right? That value is not dead. We all know it's not dead. And he's completely right. And I haven't gone through the article, so I'm not going to quote anything about it here. And he's brilliant. But a lot of these strategies have not worked out in recent past, and now we're even looking at, well, how long is it going to take for it to come back? So I think investing is an art as well as a science. I think there's things that cause you to have good returns that don't take any PhD at all. For example, rebalancing causes you to have good returns, right? Or better returns. It's like a rebalancing premium, I guess. Like, you rebalance, you buy low, you sell high. It just happens, and then you get better outcome as a result. So that doesn't take any kind of metric or any kind of quantitative thinking at all. So a lot of and those guys that I mentioned are the first ones to tell you that luck plays a huge part in it, timing plays a huge part in it. So to me, having been kind of looking at this through the lens of, I guess, I don't know if I shared this with you before, but I was kind of like a creative. I almost went into creative fields instead of finance. But I look at this from a lens of art versus science, and it's a combination of the two, and we do use very quantitative factors. But the art of it, I think, is important as well. And you can look at investing as just a way to get higher returns, or you can also look at it as a way to express something that's important to you. And so people that invest in freedom, I think, or in the Freedom 100 index and its corresponding ETF, are looking at it not just from a scientific perspective. And even if, let's say for example, China, it's going to perform better in the next 5 years, I think these people would still not invest there, or Russia or Saudi Arabia, right? So I think for them, it's more of a form of expression. It's more of a statement to stand up for freedom in a world where it's declining, and not so much just for returns. And they're not looking at it just scientifically, if that makes any sense. So anything that
100%.
changed in the investing world doesn't change how you feel about freedom. And so for my investors, we didn't see any redemptions throughout this. So hopefully that'll continue. But I think for them, they're looking at a very long term, and they're saying, hey, in the long term, probably emerging markets are going to go up. They're probably going to go up faster than domestic markets based on valuations, but who cares about that? We want to stand up for freedom regardless. And it's easy to stand up for freedom in the developed markets because most of those countries are pretty free anyway. So wherever you invest, you're going to get pretty clear data on all the countries. You're going to get pretty clear idea of what you're doing, what you're investing in. In emerging markets, not so much, because there's such a huge discrepancy in the freedom levels. So if they're going to bet on emerging markets, they're saying, we're going to bet on the freer ones, because, free people drive those markets. So yeah, I don't know what's going to happen with all the metrics and everything that we know as far as investing after this, but that doesn't change the core principles of, freer countries do better in the long run. They're more dynamic, they're, less stagnant, they're more efficient in their, labor and capital usage. They should recover faster because they should be more innovative and flexible. But sometimes that backfires. Sometimes these very unfree markets, sorry, you were going to say something. Sometimes these unfree markets, can interfere a lot in the short term. So, we've seen reports from Bloomberg that, after Chinese New Year holiday, when everything was locked down, that China banned selling by large institutions. So, if you have that type of situation, then yeah, you can prop up your, stock prices pretty well, in the short term. I don't think that's sustainable though. And so I do think that freer countries have more sustainable growth, and true growth is driven by people and the creative ingenuity of human beings. So yeah, I do think that it's a better way to invest using freer markets, but sometimes that can backfire. And when the autocratic countries do interfere a lot in their markets with good results, it's a strategy that could underperform.
Absolutely. I mean, what's interesting in thinking about all this? I mean, I'm thinking for the rebalancing at the end of the year, beginning of next year, there might be a bigger pool to choose from. I mean, I would think
Oh
that
yeah.
there's probably going to be a few of these companies, because look, we may not think of some of these these countries now as emerging markets. When you think Mexico, I don't know if you would even really think of that as an emerging market, especially with its proximity to US and Canada, but there might be others that you might not even think of as a result of the global downturn that now are part of this, and it becomes almost a value opportunity.
Right. No, I think Mexico is a good example of one of those markets that's going to probably benefit from all of this because of the diversification of supply chains out of China. So Mexico, Vietnam, probably Taiwan, South Korea as well, because they have their own companies invested a lot in China that they now have to pull out and either put back into their own countries or use. India, for example, like our top holding, TSM, Taiwan Semiconductor, just announced that they're going to move a lot of manufacturing to India. So a lot of these countries like India, Vietnam, Mexico, they're offering a lot of incentives to these companies to move their production away from China into these countries. And I think that is a trend that was already in place before Corona, but now is just, very urgent to do. So you don't want to, that's just diversification. It's not anything against China. It's like any country, anything could happen. So you don't want, for example, 40% in China. You don't want 40% of your investments or your production in China, right? So I think, or in any country. So I think that was just a diversification play, but that has been accelerated at this point.
All right. So another question I have to ask, because I can only imagine this sounds like just so much fun every year, especially when you see the new data and you're going through and you're trying to understand what got in, what didn't get in. I mean, were there any, this is kind of a variation of a question I just asked you, but
Sure.
were there any, at least in the past year, and then you could still see as ones that just missed it, but you could see a lot of good things starting to happen and potentially might get an inclusion in the next year or so?
Yeah, it's hard to predict, but Colombia has been very exciting to me. Colombia and Malaysia are kind of on the watch list, on the fringe. I don't decide if they get in those, just the scores. So Colombia has kind of, and you'll see this in a lot of these countries that are more free, is that they take a leadership role in the region. So you saw that with Taiwan. When Hong Kong first started having their protests around this time last year, they, supported them from day one. They took in refugees. They were just very supportive. And Colombia has kind of been that country in their region. They have traditionally had a lot of problems with drug cartels, right? So, but their new government has tried to rein that in, and they've had some level of success. But they've really tried to help their neighbors in Venezuela. So Venezuela, being the most unfree country economically, at least in the world, I think Venezuela and Syria are tied for the least free. A lot of Venezuelans have become refugees in Colombia, and Colombia has been very generous in taking them all in, and just and they're going to, I believe, get a huge boost from that human capital that is just flowing in at record numbers. So I think Colombia is an exciting thing to watch. Malaysia had some interesting political events where this one guy that was previously one of their leaders was jailed, and then he won an election and it was back in power, and then they had some people resign. So they've had a lot of shifting in their political leadership and things that have not happened before. So there's some hope for change. Argentina, right, has been one where there was a lot of hope for change. And there are some strategies out there that so we use the absolute freedom level. We don't use freedom momentum, except when it goes very fast on the downside, but we don't use like upward freedom momentum. Like there's some strategies that use which countries have the most upward momentum possibilities. And then what you do is you're basically investing in the worst countries because they have the most potential for growth, right? As far as freedom. And we didn't want to do that. So we just used the absolute freedom level. But Argentina was one of those countries that was exciting for those types of strategies. And, we were looking at it as well, but, again, I don't decide. We did not include Argentina when they became classified as an emerging market. But that's one to watch as well.
Got it. And, I have to ask, I ask this to all my guests. It's one of my favorite questions to ask. What investing experience would you say has taught you the most in your career so far?
That's interesting. So I think I've told you about this before, but I don't know if this has taught me the most or if it's just confirming, biases. But a long time ago, before I had any money, I bought one token share of Google. It was 2000, I believe, 11, when they stood up to the Chinese government on censorship. So the Chinese government wanted them to censor their search engine. They didn't want to do it. So instead of working with the Chinese government, they just left. And I really respected that. So, but their share price was at the time like 500 or something. So I just bought like one share. I didn't have any money. So, and then that share multiplied over time. And so, that is not a really great quantitative method of investing. So I just bought that as an expression of, hey, I like what they did and I want to, stand with them. And so, and it worked out. So, now that share has been basically, highly appreciated security that was donated into a charitable gift account, so I liked doing that. And I think I like taking a stand for what I believe in my investments. I think it's important in a world where money drives power, right? And so the money that we funnel into some of these very very unfree regimes gives their governments further legitimacy. It drives liquidity into their markets where they can take advantage of us, as foreign investors. And I don't want to do that with my money. And so to me, my money is an expression of my values, and I enjoy investing that way. Now, I do think that I do enjoy, the other types of strategies as well, and absolutely believe in value investing, size, momentum, those types of other factors. But for me, I think I have to invest in something that I have high conviction in. And in a market like this, especially like we're having here, there's been lots of times, and of course, I don't only invest in the freedom strategy. I also have, U.S. equities and bonds and, developed market. So during this downturn, I've noticed that I never once thought about selling my Freedom 100 position, even though it's the biggest position I have. It's very overweight. And the other positions I, had to have people talk me out of taking action in, right? So, which I'm glad, and always have people around you that will do that for you. There's, for the average investor, I think, an advisor is huge in their success, outcome in the long run. But yeah, I think investing is something that you believe in helps you stay in it for the long term and not sell at the worst time. So that was just one kind of experience I had that kind of stuck with me.
All right, Perth. Well, we're there with that. Where can my audience go and find more information about you and Life and Liberty Indexes?
Yeah, so lifeandlibertyindexes.com is our website. You can also get to the fund site from there. That's the index site. And I am on Twitter at Perth_Tolle.
Well, Perth, thank you so much for doing this. This was a lot of fun. I really enjoyed it. And yeah, please continue to stay safe.
Thanks for having me.
Yeah, no, it was great to have you on. Thank you.